Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, we are back with another episode of the Real Estate Investing Club. Today we have Nancy and Palmy Kitty, the Kitty sisters, apartment syndication investors and entrepreneurs, as well as podcast hosts for the Cash Flow Multipliers. Nancy, Palmy, thank you guys very much for showing up.
Yeah, well, thank you so much, Gabe, for having us on.
We're so excited to be on your show today.
All right. I told you before we hopped on here, we always start with stories. We like to hear how people got into real estate in the first place because they're never linear. And so why don't you guys take us to your story? How'd you guys get started, way back when?
Sure. You know what? You're completely right. None of the stories are very linear when you talk about like how different ways people get into real estate. And for us, it's a pretty interesting one. So Nan and I, we were in the fashion business for a long time. And so we were manufacturing women's clothing. It was a good business. We were making really good money. And we were actually really proud that we were doing so well that we only needed one source of income.
Yeah.
So we're like, yeah, this is great. Everything was running smoothly until one day, out of the blue, our biggest client decided to shut down all their stores. Just like that. Overnight, 95% of our income, what we thought was stable, was no longer stable. We became obsolete overnight.
Yeah. So we had no backup plan. So we had to quickly think, okay, what can we do? And that's when we stumble upon real estate investing. And we first start off as flipping single family homes. And we quickly realize, oh my God, that is like a lot of time, skill, and,
not HGTV.
Yeah. So we had our try with our HGTV kind
of moment. It's not as easy as they've made it sound.
Yeah. So we kind of got introduced to apartment syndication, and we started off as like so many people just starting off as passive investors to learn about it. And as we start investing and we're like, oh my God, this is pretty cool. We're getting monthly, quarterly cash flow. We're like, okay, this is something maybe instead of doing flipping, let's flip a switch and do something that can be more scalable. And that's when we start doing apartment investing.
Yeah. And the other thing is we felt it was a really complementary business. At the time when we're flipping, we have a lot of short-term capital gains from the flipping business, less than 12 months. And that part where the tax benefits of multifamily really attracted us to the idea of hey, we're making good money. It's a lot of work flipping, but we're making money. Now, do we want to pay 50, 60% of that back to the government, or do we want to keep a majority of that? And that's where that light bulb went off. And okay, not only are we going to make money, cash flow,
but we get to keep keep our
money as well, which is the most important part.
Yep, through the 1031 exchange program. Yep.
Bonus depreciation. So basically okay. Yeah. So we're getting, as a full-time real estate professional, we're getting 80 to 100% of the investment amount off in taxes right year one. So that's where we're okay, you make 100,000, you make 200,000, you
make
200,000, for example, you invest 100,000. you get $100,000 in K1 loss year one to offset your ordinary income.
Or you invest the whole thing, whatever it is.
Yeah.
Perfect.
But the point is, it's never really about like how much money you make. It's always about how much money you keep. And that's why apartment syndication to us was really attractive.
Yeah.
Perfect, man. I love it. I love your guys' story, especially you started in fashion. So you guys were actually making the clothes.
Yeah.
Yes, a lot of you
Like this shirt we made.
like a lot of people
Love
said we're from like textile to tax savings.
Yeah.
Vehicles.
It's totally different as far as like type of asset, but at the same time, it's like the business is the same. Managing people, managing different type of vendors, the type of relationship and communication. You can really transfer a lot of those skill sets into this business.
Yep. Business is business, as they say. It doesn't matter what you're doing. There are commonalities amongst everything.
Yeah.
But that's cool. I mean, you guys were in fashion. You were going down the road that you thought was very stable, and then boom, all of a sudden it's gone because of that one vendor.
Yeah.
Back when I was first launching businesses, I was trying to do digital marketing consulting. And so I was doing digital marketing for people, and I lost one of my clients, and I was like, wow, I was in the same situation. So I understand when you're in a business and you're dependent upon one source of cash flow, it doesn't matter how stable you think that is, it can be pulled out from under you. And that's when you need things like real estate to keep it up.
I love how you said that.
Yeah.
That's exactly how I feel.
Yeah.
Yeah.
Well said.
So you guys, you were flipping, but you didn't go into single family rentals. You went straight to apartments. Why did you make that transition?
Actually, our real estate journey started off with rentals, and then while we're still doing fashion, and then when we started to look for active income, that's when flipping comes in, and then multifamily.
Yeah. And the single family that we looked into was very like close by, so very expensive. We live in Los Angeles, and we really at the time didn't understand or realize that properties can actually cash flow. Like as simple as that. I know right now it sounds kind of silly, but like at the time
Light bulb moment.
We thought
appreciation.
We thought, okay, LA, it's a great market, so therefore in 30 years maybe the property will double in value. Not thinking about all the interest that we're paying into it is contribute, like you're gonna end up paying double, right? Like whatever the purchase price is. So that was like the being knowledgeable about actually what real estate the game is about. And then like when we transitioned from flipping to multifamily, that's when we were like having a lot of people tell us like, oh no, this is actually how it should be. And we're like, okay, now we get it.
That's funny. That must have been a really nice surprise to be like, wow, there's money coming in every month. That's really great.
It was like a really like, we looked at each other.
I think that's our joy of opening our inbox, like, on a regular basis. It's like, ding, distribution right now, and then as like we start, right now we're still actively also passive investing as well as actively acquiring deals. So we just love the notification.
Yeah. But it was definitely like, oh, we've been doing like basically one of those like seriously, and I'm not overstating this. It's like a life-changing moment when you realize like what you were doing, what you thought was the right way to do things is completely wrong.
Yep.
I think that goes back to say we actually didn't know that there's different type of income.
Yeah.
We just thought, oh, if you want something, you have to trade your time for money. We didn't know there's such thing as passive income, even though we had rental, because there was no passive income. Yeah. So we didn't know. Like once we knew, we're like, okay, we kept going. We didn't. And I think that's kind of like our mission to help high level entrepreneurs secure financial future while paying as little taxes as possible through apartment syndication.
To help people learn from our mistakes and now be aware that it's possible.
Yep. No, it is, once you get those first few checks coming in from monthly disbursements, or just if you're doing a passive investment from quarterly disbursements, it's pretty good. It's an eye-opening experience. So I'm glad you guys are preaching the good word out there. So you guys are in apartments. That's your main thing. Why did you decide apartments and not any other type of commercial asset?
I think most important is that we believe in real estate. So we both came from like a fashion backgrounds where laborers can be outsourced to so many different countries. So we wanted to be in an industry where we can't be outsourced. people always gonna need housing to stay. Like Pong can talk a little about even about COVID. Like
so basically our thesis going into apartments was like people will always need a place to stay. And we did our research going back a few different recession cycles. And we wanted to make sure like, okay, now that we're not going to let that happen again, like what happened to us in the fashion business. So if we're going to pick something, let's do the research and let's see historically what have done well when there's economic downturns. And at the time we did our research and we discovered that, hey, multifamily, the drop were insignificant during a recession. We went back to like 01, 2008, and the pandemic actually really proved that out.
Which is like the order is to stay at home.
Yeah.
Not like to go to something else.
This is the only thing you could do.
Right. And so basically with that thesis, we were like, okay, not to say that other investment asset class may be great as well, but for us, we found like this is a good space for us.
Yep.
And I think like if you study like the top 1%, you will know either they own real estate or if they sold their business, they will reinvest that money into real estate. And for us, because we knew quickly that single family wasn't what we really wanted. The next one was multifamily that was presented to us. So that's how we got in.
Yep. Yeah. And I like that. I mean, I like that you guys do have a focus. I mean, you have apartments. That's what you're doing. That's what you're focusing on. It's so easy. At least I had a problem when I got into on the commercial side, that you just want to do every type of asset, mobile home parks, self-storage, multifamily, strip centers, whatever it is. There's just so much opportunity out there. But you guys are doing the right thing. You're focusing, you're niching down, because then you really become an expert in that asset class. And that is where the money is made, and also where you just get the most, in my opinion, the feeling that you're making an impact. So love that you guys are doing that. So how about you're in apartment buildings, you're in LA, and buying an apartment building in LA is, I mean, that's ridiculous. You're paying gazillions of dollars. I don't even know how much they cost, but I can imagine it's very expensive.
We don't even know because we don't buy in LA. So our assets are in Phoenix, Arizona, Dallas, Fort Worth, Texas, Atlanta, Georgia. So I don't know what LA prices are, and I really don't want to know.
Yep, that was going to be my question: is where are you guys investing? I love that you said DFW, because I own 2 self-storage facilities out there. DFW, great metro. So cool you guys are out there. Is there a reason why you focused Texas, or what was your criteria when you started looking for a good metro to buy an apartment building in?
So, okay, the first very basic reason was like our first passive investment was in Dallas. So very natural progression to start looking, being told like, hey, this is a great market. We didn't know. We were and I'm sure maybe you were like this before as well. Like we were in an LA bubble. So we didn't know that the rest of the country is thriving. We just thought like the best thing is
this
happening
is the
here.
only city that matters.
We were very west, not even West Coast. We're like very, like I said, very LA centric.
Yeah.
So then we started getting educated from all the people we were investing in. It was like, why Dallas? And so we learned. So now we have our own kind of criteria, basic top levels like population growth, economic growth, rental growth, and anywhere area that can still have that for the next 5 years. That's where we want to invest our money.
Yes. And we also look for like different economic drivers, because, like Las Vegas, we heard for years that we should invest with Las Vegas. But as we all know, it's more of like
it's still like casino
entertainment kind of business. So we're looking for any area that can have like medical, tech, like manufacturing,
aerospace, finance, healthcare,
and solid economic drivers.
And it checks all that, right?
DFW kind of check out all that areas. So that's why we started there.
I love it. And I really like that you guys mentioned you kind of have 3 metrics that you kind of use. And that is so important that you have those, because it can, if you're marketing nationally, it's very easy to get stuck and try to figure out like, oh, is this a good market? Is it not? But you mentioned, net positive migration. Is the city growing? That is so important. And then do they have good economic indicators? Do they have a positive growth in their economic sector? You can just focus on those 2 metrics. You can easily decide if a metro is worth investing in. So love that you guys are doing that. The next question is, where are you guys looking to next?
Okay. So, I mean, like, it's easy. It's almost like what you said about different asset classes within commercial. It's easy to see like the next shiny object and go like, I want to be in Florida, I want to be in the Carolinas. But bandwidth wise, we don't feel like right at the second we're able to. We feel like there's so many opportunities.
I think what Palmy mean is like, we want to stick with our niche.
Yeah,
like,
we want to drill down to be expert, like you said, in the specific submarkets.
Mhm.
And we feel like there's so much opportunity in Dallas, in Atlanta, in Phoenix, where we can drill down very deep and still
Yes.
have an impact versus spreading ourselves, flying all around the country to different markets and trying to learn a new area.
And for us, like every time we involve in a deal, we really want to have boots on the ground.
Yep.
We never want to, bring investment opportunities to our investor and like, hey, this is like,
Yeah, like
South
no one's
Dakota,
there.
like, and you don't have a team there or
We
something.
don't know anything about it, but here's a deal.
Yeah. So we want to continue
Have the focus.
Yeah.
Yep. And I mean, you mentioned it, having boots on the ground. I feel like that for me is super important. Once you get in a metro and you start, building your team, you have people, your maintenance guys, you have your vendors, you have your property manager, everybody's there. Once you have that, it's just, you don't want to leave it. You have it, these people, you trust them. Having to build another team somewhere else, there's not much benefit to that. So that's cool. You guys are focusing in. I just took a look at the clock. We are rounding the corner, so it is time to jump into the quick question round. Are you guys ready?
Yeah.
There we go. That's what I was looking for. I love it.
Kitty is always ready.
All right. So the first question is about books or just any form of education. If you guys are into YouTube or podcasts, whatever. But give me 2 recommendations, one for general life wisdom and then one for real estate specific.
Okay, so the 2 books that comes to mind, the first one is like Atomic Habits. I think that's a good book, just general. The second one, I would say real estate. That kind of, this is like the
book that start our
whole thing.
Our whole thing would be the little purple book that probably everybody
has read or should reread.
Yeah, about, which is
Rich Dad Poor Dad.
I'm like,
perfect. The Bible of real estate. I love it.
Yeah.
Rich Dad Poor Dad.
Yes.
Rich Dad Poor Dad, and then you said Atomic Habits.
Yes.
That's also a good one. I read that I think a couple of years ago, and I was just anything about habits. I'm a sucker for a habit book because it's so important to get good habits, which actually brings us to the next question. Habits form the foundation of our life. So if you could point to one thing you do day in and day out that that contribute the most to your overall health, well-being, happiness, what would that be?
I think we're always reminded of our goals, like our big goals. And our big goals isn't like, to make more money for ourselves or anything, but we really feel that because we went through so much already that we actually really want to make an impact in this world. And for us is, helping other people achieving financial freedom so that they have time, they can be mothers, they can be fathers, they can, be present to your kids, because we know, like when we were trading a lot of time for money, life was just happening. Like the life that we want just happened without us. Right. We would be missing like family reunions and everything else.
Yep. Yeah. I always like to say it's not financial freedom that people are looking for. It's time freedom. And that is what financial freedom gives you, is the ability to just dictate where you're going and when you're going to be there.
Yep.
So I love that. And that moves us to the next question, which is for your younger self. So if you could go back to the Nancy and Palmy who were, say, still in fashion, you guys were making the beautiful blouses that you're wearing now. Go back to them, look them in the eye, give them one piece of advice moving forward.
Okay, this is simple.
I think we just record this podcast actually on our podcast, is that what we wish we did differently. And that would be,
it's pretty simple. We would have started sooner. We would have gone bigger.
Yes.
Bigger, faster.
And also learn how to protect our boundary, So basically,
yeah, that's great. Go sooner and go bigger. I like that. And that's been echoed across so many episodes here. Any investor, once they get into real estate, they're just like, man, I just wish I'd done this sooner. Because once you get started, you're like, damn, this works and it's fun. So love that. Moves us to the next question. We've actually already touched on this a little bit, but I'm going to ask it anyways. The United States, it's a big place, which means there's a lot of opportunity to invest. So if you could point to one market that you're most excited about, what is that?
Phoenix.
Phoenix. Oh,
Yeah.
I thought you were gonna say DFW, but Phoenix. All
Oh,
right.
because
So-
like we have like deals. We've been like really fortunate to have like our deals gone full cycle. So one of the deal that have gone full cycle is the one in Phoenix, Arizona, which is our really first
very first multifamily syndication.
and it was like in 27 months, we were able to give back 2.85x equity multiple to our passive investors. So we're really excited about
We're
Phoenix.
excited about that market. DFW is it's a mature but very strong market, and we're still looking to buy there. We
Yes.
made an offer yesterday on a property there. We're very, very bullish. But if you want to go like
Los Angeles, Phoenix, only 50 minutes as well.
yeah,
There you go. There you go. I love it. Yeah, Phoenix. My parents actually, there's so many boomers who are looking to move down there. My parents were just down there looking to buy a house. So I'm sure it's growing quite a bit.
Buy now, but don't wait till next year. It's gonna be more expensive.
Really interesting. It's growing that much, huh?
Every year,
Oh my God, every month.
every month, it's crazy.
Yeah, I believe it. I believe it. All right, and that leads us to the very last question, and this one is for the listeners. You guys have given us a lot of good advice about apartment syndications, about getting back up when you get kicked down. So I'm sure people want to reach out and say hi. What is the best way for them to do that?
So they can reach us on our website, thekittysisters.com.
We had so much fun coming to your podcast. So you can follow us on Instagram at the Kitti Sisters, or follow our podcast, Cash Flow Multipliers Podcast, where we drop 2 episodes on every Tuesday and Thursdays on tips, tricks, and all apartment investing.
Yeah.
Perfect. That is Cash Flow Multipliers, and that is a podcast. I'll put the link in the show notes. So if anybody wants to hop on that, go ahead and click the more in the description. It'll pop down the full description. In there, you can find Kitti and Palmy's links. So Kitti, Palmy, thank you guys very much for showing up. It has been a pleasure speaking with you.
Thank you.
Thank you so much. We have so much fun for real.
Yeah.
Absolutely. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you have an absolutely fantastic day. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the ebook bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.